Hey everyone, Stan here. Let's get started. Hope everybody had a nice weekend. Okay. Another edition of supply and demand zones that work. Again, the main purpose for these sessions is because there is quite a few. I developed the strategy back in the mid '90s. Started that on the trading floor of the Chicago Mercantile Exchange. Today, there are a lot of people out there, teaching and doing webinars and education, all that stuff on supply and demand, the supply demand strategy, but a lot of those people have never actually traded it. So a lot of people, reach out and say they're confused. So these little mini sessions are meant to help with the confusion and focus on the original supply and demand strategy, which is what we focus on at the Pinnacle Institute and what I focus on managing a fund and in our own trading. So let's move forward with today's zones. So remember, I am a licensed fund manager. The Pinnacle Institute is not an investment advisor. Trading and investing certainly does not come with any guarantee of success. In fact, available research does strongly suggest that the majority of active traders lose money. We've talked about that many times before. And, so don't rush into this. Take your time. This is not for everybody. Make sure you understand and are okay with the risk. And even if you are, make sure you understand how all of this works first. Okay. So the markets I thought we'd take a big kind of little step back here, right? Big step back, little step back, but a big picture look. Okay. So all of the major stock markets around the world over the past week or so have dropped considerably. And when we take this big picture, when it comes to the original supply demand strategy, it's all about structure and location. That's the focus. It's a razor sharp focus on that and only that. When we look at where this last decline started from, take a look at the NASDAQ here. This is these screenshots on the left are from our live trading and analysis sessions with our members. So you can see here we had a qualified supply zone, rally-based drop supply zone here, but look at where it was located compared to all this trading activity down here. Okay. This stuff down here is going to be typically the magnet for price. Okay, fair value, the novice space, we have rules for that. But when you have a supply zone all the way up here and fair value right down here, typically that's a high probability turning point. So the NASDAQ, shortly after that zone was created, rallied up to supply. Competition to sell caused prices to turn and pushed prices lower. All the while, this area here, which was fair value at the time, right? Which is the true magnet for price. Why? Because fair value is where the majority of buyers and sellers agree to buy and sell, right? So that naturally pulls price back to it. And that's what happened here. This area, 14,700, that's this. And of course, going through that area, this is certainly not a stopping point or a turning point by any means. And anyway, that was the big turn. That's a big 1,000-point drop in the NASDAQ in a short period of time. I see your question in the chat there, Ocean, around publishing on the channels. I'm not the YouTube expert, so I can't answer that, but we probably have support with us here in the chat, and they can probably answer that. All right, let's take a look at this, and then we're going to go look at another chart. It's a good question, though. There you go. There's the answer. Okay. So this diagram, really, this picture represents everything that we're talking about at all times. Understand, make sure you're focused on, I know everybody knows this, but make sure you're focused on what potential volume does, right? Supply and demand, sell orders, buy orders, the effect that potential orders, buy and sell orders in the market have on actual volume that gets traded. Okay? I know it sounds very simple, but make sure you understand it. The reason why we have this range here, for example, the reason why you have the tops of the range and the bottoms of the range is because above this area, there's a big supply and demand imbalance on the supply side, a lot of supply up here, and obviously very little demand, which is why we get very little actual trading up here and these pivot highs. Down here, the reason why you have these pivot lows here or the bottom of any range is because you have a big supply demand imbalance on the demand side, meaning lots of demand, very little supply, therefore tons of potential volume, but the actual volume is always going to be very small. Okay? And that's how all this works. Competition to buy at demand, competition to sell at supply pushes price back to the middle. All the while, the middle, which is where the majority of trading activity is always pulling price back to it because that's fair value. That's where the majority of buyers and sellers agree to buy and sell. And that's exactly what's happened here over the past week and a half or so in the major stock markets, right? That was the NASDAQ. Same thing in the S&P, right? So notice we had our qualified supply zone right up here. The profit zone was already opened up all the way down to here, which was big. Okay. And even at that point, that was just down to here. But we haven't had any significant demand zones until, we came into some of them on Friday, and now today we're getting a little bounce to the upside. But the S&P moved from about 42.80 down to about 41.40 in a very short period of time. Why? The profit zone was opened up to that. Okay. In other words, the distance from our supply down to our demand was large. We just saw it in the NASDAQ. I just showed it to you in the S&P. Okay. They were certainly in a little bit different locations, but with their own structure, location, in and of themselves, played out the same way. The Dow, same thing. Only the Dow had something a little bit different. Dow, I would say, represented something that was a little bit even higher probability. They all worked out fine, but the Dow had double supply zones, two supply zones on top of each other here. Okay, which means, again, if you put yourself in my shoes back on the trading floor in the 1990s, you have a big stack of sell orders at a certain price, and then the very next price point, you have an even bigger stack of sell orders. That's what this picture represents on the chart. That's how the original supply demand strategy was developed, just by observing that and seeing what it looks like on a price chart. Make sense? So the Dow ran into that. The Dow fell very quickly because price had already been through this area once, twice, okay, 2 times, meaning there was not likely to be significant demand in this area, suggesting price to go down to here. And then, of course, the demand zone that is the Dow were lower. We actually hit the Dow demand zone on Friday. So we're getting a little bounce from there. But anyway, for today, I wanted to show you, take a step back, show you how all this really works, right? Structure, location analysis, the governing dynamics of supply and demand in the visual that you see here. And then I wanted to show you how we actually do that in the markets with the NASDAQ, right, over the past week, with the S&P, and with the Dow. Okay. Hopefully that was helpful. More supply and demand zones that work. Tomorrow, when we get together, we'll go over zones from today's trading session, and we'll cover another concept. All right.